Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, August 13th, 2009. Well, as we get into today's video, folks, I want to discuss a couple pattern formations and really why we saw such a whipsaw morning action in this market. There was a really wild session yesterday afternoon off of the Fed minutes, and what you saw is when the Fed came out with their FOMC policy statement, the market initially sold off, then bounced insanely on a big squeeze here, topped out, and then rolled back over into the close. Today, we kind of got that same type of momentum, whipsaw or whiplash, as the market gapped up slightly, sold insanely hard off some really ugly retail sales and jobs numbers, and then all of a sudden took a huge rally bounce all the way back up, eclipsing and taking out the previous highs of the day. We came right up into the closing body area of this portion right up here, which is resistance, and then the market came back in. Since then, we've kind of gone into a sideways pattern with a little bit of a squeeze shoot up here into the highs from yesterday at 101.60. At that price, we saw a nice little reversal to the downside, taking that candle out on a nice reversal candle. Not an engulfing candle, just a reversal here, and then the market's kind of settled back in. But long story short, folks, the Dow's up about 16 points, the S&P's up about 4 to 5 points, and the NASDAQ is trading up about 9 points on the day. So it's a little bit of a positive day across the board. You know, not quite 0.5%. Dow is just up fractionally here, but the S&P is up about 0.4% on this day right now. And you are seeing the market hovering above this support. This is a major support in this market, guys. 101.20 is a very, very key level in this market. You got to watch this level because it also happens to be coinciding with the 50 moving average and the 20 moving average as well. So you can see this pink trend line across right up here. That's a major level. Also, you have the 50 right below it, the 20 right above it. So anywhere between 101.25 and, let's go down to that low area, 101.10. There's a 15-cent range on the spiders here. That's a major level of support. That's a major, major level. Watch that level. If you're able to take out 101.10, I think you actually break 101 and start to head south the rest of the day. But that's a major level to watch for the remainder of this day. Now, if you want to know about the other levels you're looking at, I want to just show you. If you get below that 101.10 area, then you're going to actually fall all the way down to 100.85 to 80. That area, 100.85 to 80, is a major level in this market and continues to be such. If you get through that, then you're talking about the 200 moving average and this green trend line. If you take this low from yesterday on the gap down and extend it to the low of today, you get a trend line that almost coincides with the 200 moving average right in this area. And that's going to be a lot of support. That line is at 100.70. And then the max level, which I'm really watching for, is 100.50. Overall, there's a lot of supports below current areas, guys, so you have to give the market a neutral to upside bias until, and this is the big part, until you take out 100.50. If you can take out this level right here, and I'm going to do a little X here, this level right here at 100.50 and get below and close below with confirmation. Now, this is the key, guys. You need confirmation. Now, what's confirmation when you're a technical trader? Confirmation on a technical basis that we've developed is a secondary close below a breakdown candle's low. So what does that mean? Well, take a look at this candle right here. This candle, this red candle, closed below, right? It closed below 100.50, which is this trend line right here. However, the next candle actually rebounded and got back above. So what I'm saying is, to see confirmation, you need to see a secondary close below the low of the candle that's a breakdown. So here you have a close below, that's a breakdown candle. The next candle to confirm it is a close lower than this point right here. So if we were to close anywhere below this line later today or tomorrow or the next day or the next trading day, you'd have to see confirmation. In this situation, it's a beautiful one, and we warned our traders of this in the chat room, and we talked about it in the research center yesterday to our premium guys about today's activity. We said, if you sell off and you close below 100.50, unless you confirm it, you can't jump the gun on this trade, and that's been a dead-on call so far. So again, discipline is number one as a trader, folks. You guys out there that have traded a little or invested or swing trade, do swing trading, you guys know by now that it's all about discipline. Cutting your losses as soon as it doesn't work out, and then maxing out your profits. That's what it's all about. That's why a lot of amateurs got fooled on this today, but we did not. And you have to understand the rules to abide by. This is what we teach in the research center. This is what we teach in the chat room. This is across the board what we do, folks, is understand and be playing on the side of understanding the technicals and not jumping the gun. All right, now let's talk about the highs of the day. How did we know the highs of the day were going to be up here? Why was this a good shorting area? Well, number one, when the market popped up to the highs here, you saw it hit yesterday's highs. All right, well, that's obvious resistance. But to really be secure, you always like to have two levels to watch. And if you take yesterday's low to yesterday's pivot low right down here, you can see how beautifully it comes right up here and crosses through the high as well. So that gave you 2 points, or what we like to refer to as a necktie of two of our trend lines, which again will signal a very, very sizable level of resistance. And the market, look at the reversal on the market here. So really what I'm doing in today's video, guys, is more teaching. I want you guys to really use this as a utilizing teaching aspects of this market and really understand. Now, what are you doing here, folks? So we obviously know how we got the high here. Here's the high. That's obviously to the closing levels right across here. You can see how no candle closes above this level. That gives you the initial high today before the pop higher, and that was into the double top and this green trend line. Now, what happens here? What's going on? Well, right now you have a nice reversal candle you're working off of, and you actually have sideways consolidation, which could be looked at as a bearish pattern. But remember what I said before. The volume, it's a Thursday afternoon. Most of the data is already out in this market. You can't jump the gun on anything, really, in my opinion here, because light volume buy programs can come in at any point in the day. Especially as we inch into the middle afternoon portion to late afternoon into the close, you never know when a buy program is going to hit and this market's going to just shoot up to the moon. So having said that, yes, it's a nice little bearish possible pattern developing here. Notice the bearish pattern, down move, sideways inside candles, but you have to be a little on the side of caution here because you have support at the 20, support right here at 100 spot 101 spot 15, and support at 100 spot and 100.1 101.10. So 101.10, 101.15, all the way up here. A lot of supports. So granted, it's a nice bearish pattern, but you have to utilize all risk-reward tactics here. And the risk-reward are telling me as a trader, yes, it could break down, but risk-reward is not that great. Maybe 60-40, 65-35. That's not good enough odds. I want 80% to 90% success rate. That's what we strive for here at InTheMoneyStocks.com. So you have to understand there's more rules than just looking at pattern, price, and time. You have to put it all together. You have to look at volume. Look at the volume, dead volume here. That's telling you also that a buy program could shoot this market up. So again, while there may be a slight favor into the downside, not quite enough here to really give us the odds. Now, should the market sell off hard into the close and we close below 100 spot 50, well then all of a sudden the whole game plan changes here and you can start to look a little on the downside in our opinion. But that's very, very important to note, folks. Please understand there's a lot of factors involved here. It's not hard to learn. You just have to learn all the factors that you can utilize. And again, that stuff we go over in the Research Center, aside from calling guidance out, stock picks, ETF picks, market trades, oil, gold, the dollar, all that's covered in the Research Center. Hidden gems, Pro Trader Watch List, Hot Charts and Alerts, which both have more plays on them, guys. The Hot Charts and Alerts and Pro Trader Watch List have more calls out there on them as well. All that stuff included in that Research Center. You can go sign up for it at any point there. $49.99 a month to get all of that. And trust me, it's enough data to be the best service out there for what you get involved in there. And we believe it's the best guidance as well. All right, folks, just one more little note here, folks. That 100 spot 50 is key. I showed it to you yesterday here. This is your intraday 60-minute, very, very important level. You're basically just trading sideways today. Today, a very muted day. Gold is a little higher. Oil's a little higher on a weaker dollar. That's what you're really seeing. The Dow is up 13, S&P 500 up 4, and the NASDAQ up about 8 points. Have a wonderful rest of the day, folks. Come join us at InTheMoneyStocks.com. We hope to have you with us shortly, and we'll talk to you tomorrow. Take care.